Hey everyone, this is Megan
and Darla. We are your hosts of the Enlighten Benefits podcast.
Our goal is to help you understand all things insurance. In each episode, we will tackle the confusing topics and terminology as it relates to insurance.
We want to create confidence over confusion and make insurance suck less.
We hope you enjoy our show. With individual policies, I always tell people, this is something, as I mentioned earlier, this is something that can't be taken away from you. So even though it's not fun to think about life insurance when you're in your 20s and 30s, that is the perfect opportunity to purchase because you're locking in at that lower premium rate. So for example, I find that they go in about every 5 years is when you'll see that bigger jump. So if I purchased a policy whenever I was 25 years old, I'm locked into that rate until the end of that 20 or 30 year term. And it would encourage, I think people are scared of life insurance because again, they think they're invincible, but it's also something I would much rather, it's a lot sexier to buy a Starbucks drink or go on a date night than to pay a $30 or $40 life insurance premium.
Hands down. I agree.
It's just a hard conversation to start.
It is. And you know, the different types of terms, I mean, you can do a 5-year term, you can do a 10, a 20, a 15, there's all kinds of limits you can put on that, which is going to affect the price, right? I mean, so my big phrase that you'll probably hear me say over and over again, you get what you pay for. If money is an issue, a 5-year term is going to be cheaper than a 30-year term because the insurance company is locking that in for a shorter period of time.
Let's talk about that. Sorry to interrupt your thought. What will you explain, or I can, either one, what does term mean? What does that terminology even mean?
In my career, it was explained to me 35 years ago that a term insurance, if we were going to put it on a level where regular people, they don't speak insurance, could understand, it's like renting a house. So you rent that house. You don't really technically own it. Equity, you're not going to build any equity, I guess would be the better. You do own it, but you're not building any equity or anything like that. So you're just paying your rent. You move, you don't get any of your money back.
Okay.
So term is kind of a way where you just say, you know what, I've got a 20-year mortgage. I want to take out $500,000 and I'm only going to need it for 20 years. And then at the end of that 20-year period, I'm done. I don't need it for anything else. So it has its place. I mean, then you also get into people, obviously, when you're younger, you have children in the home like yourself. Money's an issue. Budget's an issue. Mm-hmm. So I need the most bang for my buck, and I can buy $1 million in term insurance for a lot cheaper than I could get $1 million in cash building, which is whole life. That we can talk about that later. But term is always cheaper, but you're not building any equity, or when you're done paying your premiums, you're done.
So basically, if we take out a 20-year term policy, I tell people in 20 years, it's going to go away.
Yes.
So you're not going to be insured any longer. Some policies have an opportunity for you to extend those. There's all kinds of different ways around that, but for sake of conversation, it goes away after 20 years. So when we're talking about how much life insurance do you need, I tell people, let's take a look, and I am no financial analyst. I just say, this is like a good rule of thumb. How much money would you need to pay off all of your debt? So take a look at your home, if you own one. Do you have any student debt? Even your car? How much debt do you have? And then on top of that, would you like to leave your significant other or your children money to continue living? So if you're the primary breadwinner in the household, men or women, how much money does your significant other need to get? Would you want to set them up for 5 years? Would you want to set them up for 10 years? What does that look like? Do you want to leave a legacy for your children? If right now my kids are pretty young, so, would I want to make sure that if I passed away tomorrow, that my kids have enough money to go to college? Or, what does that look like? And it's different for every person. And the other hard thing is if you buy a life insurance policy when you're in your 20s or 30s, then it might look completely different when you're in your 40s or 50s. I know my life looks very different than it looked whenever I was 20. So the amount of people that I'm taking care of, or, what does my income cover, it would look very different.
Oh, absolutely. And I think, if you put that on a personal level with somebody that might, once again, these is all kind of insurance terminology, but it's very true. I always tell people, if you're in heaven and you're looking down on your family, what kind of a legacy do you want to live, or for them to live? What do you want to leave behind? How would you want them to be set up? And I also say, do not put your family, they're in the middle of emotional devastation, correct? So don't have them also thinking about being in financial devastation.
Exactly right.
So you just have to, and we've all seen funerals. We've been to funerals, and I feel like there are a lot of people that are at that funeral that you hear whispers of, did he have life insurance? Right. What's she going to do? She's got 3 kids. She's a stay-at-home mom. And, those are the little conversations that are going on in the background, because they're looking at that front row. And depending on how old they are, if they're in their 20s and 30s and something has happened to the breadwinner, like you said, everybody is just thinking, oh my goodness, what are they going to do? And so if you left behind the fact that he left her $1.2 million, it's like, I just feel like it's just the thing to do, the right thing to do. Especially
if you're the primary breadwinner, like you said. And you're right. How long is it going to take, even if you're a stay-at-home mom or dad, you're not going to be able to go to work immediately and start making a living for your family. You're going to need a few months, sometimes years, depending upon the person. You're going to need a little time to regroup. So hopefully your life insurance will pay off all of your debt, and then it will also set your family up for a certain period of time to be able to mourn your loss and to seek the help that they need to move past that.
Oh, absolutely. And I know, Megan, you and I have been in this situation, but just to let everybody know, as an insurance agent, one of the most fulfilling parts of our job is to, after the funeral, after everything, after everybody goes home, and now it's just them, to be able to hand deliver a death benefit check, whether it be $20,000 or $1.2 million, that feeling of handing that check to that living spouse, knowing that you just helped them through all of the fears that they had, it just gives me goosebumps right now, just to know that being an insurance agent usually is not something that people want to do, but there are times when our job can be very fulfilling. It's very emotional, and it gives us the opportunity to give people hope.
Right. When we're talking about beneficiaries, I get the question a lot, whether it be group or individual. I get the question a lot, can I leave this money to my children? And I'd like to hear your thoughts. My communication to our clients is, how old are your children? Let's kind of talk through this as we are listing beneficiaries. How old are your children? And if you left this earth today, would they be able to use that money to take care of themselves? So my answer, with my oldest being 13, oh my goodness, mine would want to buy a Ferrari. Like, he would not not be able to take care of himself.
Yes.
So I understand that, again, parents wanting to set their children up and to leave behind that money. But I always encourage them, let's think about this for a second, because if you're, let's just say their mom and you're a single mom and you're leaving Earth, you want to make sure that those kids' needs are being met. So I always encourage them to either seek, the advice or the counsel of a living will or a living trust situation, which hopefully we're going to have a guest speaker come and talk to us about those ideas at a later time. But I always encourage them, is there somebody else in the family that you would want to leave that money to so that they could take care of your kids? Because at 13, my kids aren't going to be able to go purchase groceries for themselves. And, obviously my husband would, but if it was just a single mom situation, do you encourage people to go ahead and list their beneficiary as their children? Or what is your recommendation for people?
No, I am definitely in the same playing field as you. I think people need to understand, obviously, with you as a mom, you want your child's best interest at heart, and you're automatically going to lean towards, I want to leave my kids as a beneficiary. I mean, you just want to take care of your kids, but reality, you're not going to be here. And the reality of it is that money is going to lie in probate until they turn a certain age. So, and that age is still pretty young for somebody to get $500,000. And so exactly, they don't really have the life lessons of invest that money and live off the interest. So I'm exactly like you. I always say, I will put your children down.
Yes. But I'll do whatever you tell me to do.
I'm going to do what you tell me to do, but I'm going to tell you what's going to happen because you're not going to be here. Right. So, and I have just heard that if you do leave a small child, let's say you have an ex that's in the picture, but you pass and your children are young, there could be a possibility that your ex-spouse could get their hands on that money because they now become the primary caregiver. Yeah. I think they would have to get an attorney. I think there's a lot of legal things in there. Most of the time, hands down, beneficiary is indisputable. But if you've got two small children that are under the age and now they're going to go to your ex to be raised, it could probably be proved in court pretty easily that they need that money to provide for those kids.
Sure.
So if you have a mom, a dad, a sister, somebody that you trust 100% hands down that would invest that money for them, and money does crazy things to people, right?
No.
So,
or not even just invest it for the kids, but also I understand that I know that it costs a lot of money to take care of kids.
It does.
So leaving whomever is going to be responsible for your children, to put food on the table, to purchase their clothing, to pay for those sports.
Right.
Leave that money to them so that they can use it to raise those children.
Exactly.
Let's don't give an 18-year-old $1.2 million.
No.
Especially if it's...
Especially your kids.
Especially my son.
Yes. That's what we need to use as an example.
Yes.
So, but probably the trust, to be honest with you, like I said, if we do have a guest speaker, that is not our cup of tea, but wills and trusts, and just having all of those plans laid out is so, so important if you have children.
Yes, I completely agree. Disclaimer. Subjects that we discuss on the podcast are meant to be used as topics of conversation. All figures given are sheer examples. All information is subject to change and probably has changed since the airing of this podcast. Rates and figures change depending upon the demographic in which you live. Anything discussed in this podcast is our opinion. We do not represent Medicare, any governmental agencies, or any of the carrier partners on the show. Each person should do their own research on the various websites to ensure accuracy.